Hey folks, want to come on here and shoot a quick podcast episode. This one's going to be on finance in Australia. For those of you who don't know, I'm based in Sydney at the moment. If you know anyone that's around for a beer, coffee, sauna, or sea swim, please let them know that they can reach out. By the way, I'm looking forward to getting into a podcast studio in the next few weeks, all going well. Still open to sponsorship. That said, let's get into the show. Here's a comprehensive overview of the finance sector and financial system in Australia, covering structure, institutions, markets, regulation, and current trends. Number one, Australia's financial system, structure and key roles, what the financial system does. Australia's financial system enables saving, borrowing, investing, payments, risk management, and capital allocation across the economy. Key components include banks, non-bank financial institutions, markets, and infrastructure such as payment systems. Major types of financial institutions, banks, and authorised deposit-taking institutions, (ADIs), include commercial banks, credit unions, and banking societies, taking deposits and providing loans. Non-bank financial institutions, (NBFIs), finance companies, securitizers. First time I've heard that word. Well, second time now. I checked it earlier, about 5 minutes ago. Broker deals, etc., or EDC. There's a full stop at the end. Anyway, we'll stop. We'll sound more natural. Hopefully, we'll get into this. Insurance companies and fund managers, life and general insurers, asset managers, superannuation funds. Financial markets. Australia has a well-developed market for equities. This is a bracket shares primarily via the ASX and bracket debt, bracket government and corporate bonds, and bracket foreign exchange. Bracket AUD is among most traded currencies, and bracket derivatives and money markets. These markets allow trading of financial instruments and risk management for investors and institutions. Market infrastructure, critical systems like payment networks, settlement systems, and central counterparties keep transactions smooth and secure. Number two, banking, the core of Australian finance. The Big Four, or the quote, Big Four. One sec. Excuse me. Yeah, I think it's a quotation mark. We'll go with that for the moment. The Big Four anyway. Australia's banking sector is highly concentrated. The Commonwealth Bank of Australia, (CBA), this isn't a quick plug, and I'm not a financial advisor, but I did start using that service for just in the last week or so. I think it was yesterday or the last week, so I thought I'd mention. Westpac Banking Corporation, Australia and New Zealand Banking Group, (ANZ), National Australia Bank, (NAB). These four dominate lending, deposits, and retail banking. Sector's role contributes to 7.5% of GDP. For those of you who are listening out there, don't know what GDP is. I think we went over this before, but it's all good. Short for gross domestic product, contributions to the EC budget were based upon relevant GDPs. No, that's not it. In simple terms, GDP, gross domestic, it's 11:30 or 25 past 11 in the evening. If I jumble my words, this is very light listening, hopefully light listening. I know we're talking about finance, but again, by the way, I didn't mention at the start, but I'm not a financial advisor. So if you're using this to make any decisions, short-term, medium-term, or long-term, please seek out the people that are qualified to give you any sort of advice on the topic of your personal finances. So GDP, gross domestic product, is the total monetary value of all final goods and services produced within a country borders over a specific time, like a year or a quarter. It's like a giant scorecard showing the size and health of a nation's economy by adding up everything bought and sold. It includes things like cars, haircuts, government spending, and new buildings, and a rising GDP usually means the economy is growing. Think of it like this: a country's, quote, lemonade stand, end quote, economy. Imagine a country as big as one lemonade stand. GDP is the total money you earn from selling lemonade, bracket goods, end bracket, and helping people, bracket services, end service, over a month. What it includes: goods, this is on Google, by the way. Tangible things like food, clothes, and electronics. Services, actions people do for others, like haircuts, doctor visits, or teaching. Within borders, everything inside the country, whether by local or foreign companies, all spending, consumer spending, government spending, investments, and net exports, bracket exports minus imports, end bracket. Why it's important: economic health, it's the main way to gauge if the economy is growing, bracket expanding, end bracket, or shrinking, contracting. And that's in brackets, by the way, as well. The bracket contracting, end bracket. So maybe I'll mention the brackets. Tracking progress, it helps compare economic output over time and see how well a country is doing. The number one in the world, by the way, is the United States. Number two is China. In 2026, this is on focuseconomics.com, the top 10 largest economies in the world in 2026, biggest global economies. By the way, I'm not an economist, but I thought I'd get into this. Now that we're on it, according to the consensus forecast of the top 10 largest economies in 2026, 5 will be in Europe, 3 will be in Asia, 2 will be in the Americas. Most of the economies, concretely, the G7 members, are already wealthy within. I know I'm mentioning a lot of terms here if you're new to this topic, so please excuse me if you feel like this is going over your head. I completely understand. I've been there, and I've only, in the last 12 years, mainly in the last 8 years, I've gotten into this a bit more. So top 5 economies in the world, we have the United States, 2026. We talked about, concretely, the G7 members already wealthy in the USD GDP per capita terms. However, there are also a few emerging markets on the list that are relatively poor in person terms, and those whose large economic size is linked instead to their huge domestic populations. Likewise, while most of the economies in the top 10 have potential growth rates below the global average due to already high physical and human capital stocks, 2 of the Asian economies listed buck that trend. So we have the United States, number 1. We'll talk about the 2026 GDP USD. We'll get back to Australia in a moment. 31.1 trillion. And then we have number 2, China, 2026 GDP USD, 20.2 trillion. Then we have Germany, 2026 GDP USD, 5.4 trillion. India, number 4, 2026 GDP USD, 4.5 trillion. Japan, number 5, 2026 GDP USD, 4.4 trillion. The 6, United Kingdom, 2026 GDP USD, 4.2 trillion. 7, France. I'm going to get into this in a bit more depth the other day in another show, or in the future. Number 7, France, 2026 GDP USD, 3.6 trillion. The USD is United States dollar. And I think, forgive me if I'm wrong here, the reserve currency of the world. So if all else fails, we go back to the dollar. And me personally, I like to think of a GDP as the sum of all economic goods in a country, which we already got into a bit. I think the term scoreboard was mentioned in the previous one. We'll get into back to Australia in a moment, I promise. France, number 7, 2026 GDP USD, 3.6 trillion. 8, Italy, 2026 GDP USD, 2.7 trillion. Russia, number 9, 2026 GDP USD 2.5 trillion. Canada is number 10, 2026 GDP USD 2.4 trillion. And then factors that influence GDP rankings. A nation's economy is a combination of, we already got into this a bit. I think Australia are sitting in right now. Hopefully this is still recording. We're good. 10 minutes in. Thank you for listening to this far. Excuse me if I've been very or quite expansive. We have the Australian dollar as well, the AUD, USD AUD. The US dollar is the most widely held currency in the allocated reserves. I think it's USD reserve currency. The dollar has been the world's principal reserve currency since the end of World War II and is the most widely used currency for international trade. This is the Council of Foreign Relations. High global demand for dollars allows the United States to borrow money at a lower cost and use currency as a tool of diplomacy that comes with drawbacks. We'll get back to Australia. I think they're in the top 20 economies on Earth, by the way. And again, excuse me if there's a lot of concepts that I'm just going over very quickly. Top 20 economies on Earth. I like to think of it like the Premier League, the top 20 teams in England in football. So we have Australia in 15th at the moment, 1.83. This is on Worldometers. Let's see if it's the same. It's very similar. I think it's the same. Number 1, United States. Number 2, China. Number 3, Germany. Number 4, Japan. Number 5, India. Number 6, United Kingdom. Number 7, France. Number 8, Italy. Number 9, Russia. Number 10, Canada. Number 11, Brazil. Number 12, Spain. Number 13, Mexico. Number 14, South Korea. I feel like I'm 15, Australia. Number 16, Turkey. Number 17, Indonesia. Number 18, Netherlands. Number 19, Saudi Arabia. Number 20, Poland. Number 21. And then we'll talk about the top 20. Almost feel like, I know I mentioned the Premier League, but the World Cup's, anyway, we won't get into that yet. But yeah, well, the top 20 teams, top 20 economies on Earth. Anyway, we'll get back to this. So the Australian finance sector contributes about 7.5% of the GDP, so the sum of all economic activities in the region or the country of Australia. Yeah, measures of how well a country is doing, a health checks of sorts, represents all goods and services produced within the country, usually over 1 year. Perfect. I just want to double check, triple check. Let's get back to it. Employs hundreds of thousands, central in credit provision and financial intermediation. Trends and recent developments, record profits. The CBA boasted a strong full-year earnings on lending growth and dividends in 2025. Branch changes. Physical bank branches are declining as digital banking rises. Closures have accelerated to... Let me just make sure I had to pronounce this word. One sec. Moratoriums. It's the first time I've ever heard that word. What does it mean? A moratorium is the amortization to either postpone or repay of debts or performance of obligations, or to suspend some activity or law for a period of time, often indefinite in duration, until the purpose for which the moratorium was granted is satisfied or resolved. I don't think I need to know that right now. All good. Excuse me with the M's. Branch changes. Physical bank branches are declining as digital banking rises. Closures have accelerated through, we already talked about this, the pronunciation. Moratorium. And post office partnerships try to support regional access, cut jobs and digital shift. Major banks cut thousands of jobs in 2025 amid digital transformation and cutting cost. Regulatory enforcement, ANZ agreed to a record penalty for misconduct dealing with customers and government bonds, highlighting regulatory oversight and customer protection focus. Number 3, regulation and stability. Key regulators. Australia's financial system is overseen through a coordinated regulatory framework agency, APRA, bracket Australian Prudential Regulation Authority, end bracket. Main role, prudential supervision, bracket banks, insurance, super funds, end bracket ensures institutions are safe and well capitalized. The ASIC, bracket Australian Securities and Investments Commission, end bracket market integration and consumer protection, enforces conduct rules and disclosure standards. The RBA, bracket Reserve Bank of Australia, end bracket central bank, conducts monetary policy and supports financial stability and payment systems. Australian Treasury, government advisor on policy, legislation and financial system framework. These agencies operate through the Council of Financial Regulators, bracket CF4, end bracket, for coordination on stability and crisis management. Financial stability focus. The system prioritizes stability, monitoring risks like household debt, cyber threats and stress in the financial sector to avoid systematic distribution. Number 4, broader financial services industry. Industry scale. The financial services sector accounts for roughly 8% of Australia's GDP and employs 400,000 people across banking, wealth management, funds, markets, and advisory services. Innovation and trends. Fintech and digital banking, rising competition and digital offerings, including open banking and neobanks. Fascinating. The term neobanks. A neobank is a digital-only financial technology, bracket fintech, and bracket company that provides banking services entirely online without physical branches, using mobile apps and websites for streamlined, tech-focused customer experience. They offer accounts, cards, and money management tools, often with lower fees and better interest rates, by avoiding overhead costs, and sometimes called, quote, challenger banks, end quote, for competing with traditional banks. Key characteristic: digital first. All services are managed via mobile apps and or web platforms. I'm presuming this could be, I'll get into that in a sec. Offering convenience and real-time features like budgeting and spending insights. No branches. They don't have physical locations, reducing operating costs. Kind of like the physical branch of the day, not gonna lie. Tech-driven, built on modern, but I also think I have a neobank as well that I used in Ireland. I've used it a bit here when I arrived. Revolut is a prominent global fintech company and a leading, quote, neobank, end quote, bracket digital-only bank founded in 2015, which we got into. You can go back and check out in the podcast. Operating in over 48 countries with over 65 million customers as of 2025. It offers an app-based, all-in-one financial platform featuring currency exchange, international transfers, stock trading, and saving accounts with varied subscription plans. Key aspects of Revolut as a neobank: services, provides a, quote, super app, end quote, for finance, offering fee-free currency exchange, budgeting tools, crypto, stocks, commodities, and travel perks. Structure: while it operates with banking licenses in some regions, bracket e.g. Lithuania/EEA, end bracket, it functions primarily with e-money licenses in others. In the US, it partners with Cross River Bank. Growth: in 2025, Revolut was named, quote, world's best digital bank, end quote, by Euromoney, making a major milestone for non-traditional banks. Fees and plans: offers a free standard plan with paid tiers, bracket plus, premium, metal, ultra, and bracket, providing higher limits insurance, and better exchange rates. Revolut Business provides business accounts for companies in the UK, EEA, Australia, and the US. Revolut is known for rapid international expansion and a focus on technology-driven financial services, often acting as a challenger to traditional brick-and-mortar banks. Lovely stuff. Let's get back into things. Cybersecurity and fraud prevention, increasing investments to counter growing threats, ESG and sustainable finance, growing interest in green bonds and climate-linked financial products, decentralized finance, DeFi, regulatory frameworks are evolving to integrate digital asset ecosystems. Key points, at a glance, robust and regulated, strong regulation and coordination help maintain stability and consumer confidence. Bank-centric, banks remain central, dominated by a few large institutions. Digital transformation, digital services are reshaping access, branch networks and job roles. The Australia is one of the sources. Growth and innovation, fintech, open banking and sustainable finance are expanding market capabilities. Fascinating. I think that's all we'll get into for the moment. Let's see what Gemini has to say. As of mid-January 2026, the Australian financial landscape is defined by a quotation mark, wait and see, end quotation mark, approach from the Reserve Bank and a cautious but resilient stock market. While inflation has cooled slightly from its 2025 perks, household budgets remain under significant pressure from high rents and energy costs. Number one, interest rates and inflation. The Reserve Bank of Australia, (RBA), currently holds a cash rate of 3.6%. Let's look this up. The cash rate set by the Reserve Bank, like Australia's RBA, is the overnight interest rate banks pay to borrow money from each other, acting as a benchmark that influences all other interest rates, including mortgages and savings. Central banks use it as a key tool for monetary policy to manage the economy, raising it to curb inflation. Cooling spend, or lowering it to stimulate growth. Encouraging spending, How it works. Won't get into too much. Overnight loans, central banking control, economic influence, impact on you, higher cash rate, lower cash rate. Key takeaway, the cash rate is the foundation for the entire interest rate structure in a country, allowing the central bank to steer economic conditions by influencing the cost of money for everyone. Let's continue. Inflation update, the most recent monthly CPI data. November 2025, showed inflation easing to 3.4%, down from 3.8% in October. Next decision, all eyes are on February 3rd, 2026 board meeting. Market segment is split, while some analysts like CBA, predict a potential 0.25% hike, like combat, quote, sticky, end quote. You need maybe some more food, have a snack. Services, inflation, others expect a prolonged pause or a cut later in the year. Key drivers, electricity prices are rising, and rising rents continue to be the primary contributors to the cost of living crunch. Number two, the stock market, ASX, the S&P/ASX 200 has had a positive start to 2026, up approximately 1.6% in the first 2 weeks of the year. Sector performance, gold and defense stocks are leading the charge. Companies like Greatland Resources, bracket GGP end bracket and Ostal bracket ASB end bracket have seen a significant gain 20 to 30% end bracket due to global geopolitical tensions and higher gold prices. Valuations. The market is trading at a premium bracket roughly 18.6x forward earnings end bracket, which some analysts warn may lead to a seasonal correction in March or April. Tech recovery. After a bruising 2025, there are signs of recovery in the tech sector, with companies like Zero and Catapult Sports showing strong operational growth despite recent share price volatility. Number 3, property and household finance. Housing remains the number one financial concern for Australians, particularly younger generations. Rental crisis. Rent is cited as the top financial pressure, followed closely by mortgage repayments. Mortgage stress. If a rate hike occurs in February, a typical 600,000 AUD mortgage, this is AUD Australian dollars, 600,000 mortgage could see monthly repayments rise by another $90. Intergenerational wealth. Major bank CEOs have recently flagged rising intergenerational inequality as a structural risk to the economy, with first home buyers increasingly reliant on family support. Economic outlook for 2026 indicator. 2026 forecast GDP growth 2% to 2.3%, unemployment 4.3% to 4.5%, wage growth 3.1%, AUD to USD 0.67%. That's for transferring over the funds. Super interesting. Perplexity. I think we really covered everything here. Finance Australia can refer to several different things, so a bit more detail from you would help narrow this down. Currently, it is most often means one of the following in an Australian context. Government finance. The Australian Government Department of Finance manages federal budgeting, expenditure and financial management frameworks for the Commonwealth. It provides policy advice on the federal budget, financial accountability rules, and whole of government procurement and governance settings, financial system and regulators. The Australian financial system includes, we already went over this, banks, credit unions, building societies, insurers, superannuation funds, and capital markets such as ASX. Key regulators, we went over this. Maybe we didn't. This particular key regulators are the Reserve Bank of Australia, bracket monetary policy and payments, end bracket, the ASIC, bracket markets, companies, financial services, consumer credit, end bracket, and APRA, bracket prudential supervision of banks, insurers and super funds, end bracket, industry bodies and institutions, the Australian Finance Industry Association, bracket AFIA, end bracket, is the main industry body representing over 135 members across bank and non-bank lenders, fintechs, vehicle and equipment finance providers, and related service firms. Export Finance Australia is the government's export credit agency, providing loans, guarantees and insurance to support Australian exporters and overseas infrastructure projects. Personal finance in Australia for consumer money management, bracket budgeting, debt, super, investing, end bracket. And by the way, super, I think it means superannuation. We'll get into that at the end. A major government-backed resource is Money Smart, which offers free calculators and guidance for Australians. Topics include dealing with debt, choosing financial products, and understanding superannuation and avoiding scams. By the way, I'm not an advisor, so you want to check that out. Studying finance in Australia. Finance Australia is also used in the context of university finance degrees offered by Australian institutions covering corporate finance, investments, risk management, and related fields. Typical undergraduate programs include courses such as financial modelling, portfolio management, and international finance, aimed at roles in banking, funds management, and corporate advisory. Happy days. We'll finish off with this one thing. Superannuation, bracket, often called, quote, super, end quote, bracket, is Australia's compulsory retirement savings system. Here's a clear, simple breakdown. What is superannuation? Superannuation is the money set aside during your working life to fund your retirement. It's invested on your behalf and generally can't be accessed until retirement age, bracket, with limited exceptions, end bracket. How super works: number one, employer contributions, bracket, super guarantee, end bracket. Employers must pay 11.5% of your ordinary earnings, bracket, as of 2024-2025, end bracket, into your super fund. This rate is legislated to rise to 12%, paid on top of your salary, not taken from it. Number two, your super fund. Your money goes into a super fund which invests it in shares, property, bonds, cash, infrastructure, etc. Common fund types: industry funds, e.g. Australian super, uni super, they're in brackets, bracket, e.g. Australian super, uni super, end bracket. Retail funds, bracket, run by banks / financial companies, end bracket. Public sector funds, SFs, bracket, self-managed super funds, and end bracket. Why super is powerful: tax advantages, employer contributions taxed at 50%, bracket, usually lower than income tax, end bracket. Investment earnings taxed at 15% and 0% in retirement phase. Compound growth over decades, one of the largest pension systems in the world. I think it's fascinating. Discovered it last week while I was going to put out this episode, but ended up being a mistake, so I thought I'd reshoot it. When can you access super? Generally when you reach preservation age, bracket, between 55, 60, depending on birth year, end bracket, and retirement, or turn 65, bracket, even if still working, end bracket. Early access, bracket, limited cases, end bracket. I'll stop with brackets. Severe financial hardship, compassionate grounds, bracket, medical treatment, etc., end bracket. Permanent incapacity or terminal illness. Contributions you can make: employer mandatory, bracket, mandatory. I know I said the last one. Super guarantee, bracket, SG, end bracket. Personal, this is bracket, optional, end bracket. I'll stop with the brackets. Concessional contributions before tax, cap applies. That's in brackets again. Non-concessional contributions, bracket again, bracket, after tax, higher cap, end bracket. Government may add co-contributions, low income super tax offset, bracket, LISTO, end bracket. Important things to watch: fees. High fees can seriously reduce, again, I'm not a financial advisor, can reduce retirement savings. Investment option: growth versus balance versus conservative. Insurance: inside super, life, TBD, income protection. Multiple super accounts can erode savings, bracket, usually the best consolidate. Key takeaways: super is mandatory retirement savings in Australia, funded mainly by employers, strong tax benefits, long-term investment focused on retirement income. You usually can't touch it until retirement. And I think that's the one big takeaway from this whole entire segment on finance in Australia would be the concept of superannuation. It's the first time I've heard of it. I think it's interesting. We talked about neobanks and digital banks and that transformation, but I think superannuation, as someone coming from Ireland, I've just heard of this, and yeah, I'll just get into this. So yeah, the one big takeaway, which we'll get into now, which I talked about superannuation, Australia has a very strong, tightly regulated financial system with superannuation at its core. The combination of strict regulation, dominant but stable banks, and compulsory superannuation means Australians build long-term wealth more reliably than in many countries, while the system stays relatively safe and resilient. just want to come on and talk about it. Now we're 35 minutes in. Thanks for listening.